we've estimated that we can fully reinstate that mill for 26 million Australian dollars, which is basically as close to zero as you're going to get for being able to turn on a mill and start producing 30,000 ounces per annum. The significance of that is it's a very cheap step into operations with very low dilution.
All right, welcome back inside our proactive newsroom. And joining me now is Alexander Scanlan. He is the managing director for Barton Gold. And Alexander, it's good to see you. How are you?
Doing well, Steve. Thank you. How are you?
I'm doing well. Good to have you along. Excited to learn a bit what's going on with the company. I know you've had some recent news out, and we'll talk all about that and more. But first, maybe for those not familiar, tell me a bit about the company.
Yeah, look, 10,000 foot perspective is we are the leading gold developer in the state of South Australia, in Australia. So South Australia is a very well-known state for hosting the Gawler Craton. So this is where Olympic Dam is owned by BHP and also the Carrapateena and Prominent Hill mines. So they have the copper belt. That same mineralized basin, as it trends to the west, it goes from being sort of deep and coppery to shallow and goldy. And we spent a few years acquiring essentially every significant historical exploration and production gold asset. So we've completely consolidated essentially a sort of monopoly on key assets. We also own the only gold mill in the region. So our strategy has been to step back, build up a much larger dual platform development approach. And we are now moving towards reanimating our existing fully permitted mill at the end of 2026 to make that transition to production and then build our second mill and grow up to 150,000 ounces per annum.
And that process of acquiring all that land literally took place recently. You found it, you finished off what you were trying to do. So this obviously been
Yeah.
a long process, the one you're pretty happy with, it sounds like.
Yeah, look, it's these things are always very long arcs when you sort of lay out these strategies. It did take about 3 years to get three of the main assets together, and the recent acquisition was sort of actually get the fourth kind of main historical asset in that island chain in that Gawler Craton. So we're very pleased with that acquisition. It gives us a lot of optionality, but it now gives us essentially a very extensive foundation from which to now shift into operations and grow and build and continue to extend our position in the state.
And in fact, you've done some drilling recently at one of your projects. I know it's not a huge drill program, but it's really getting some drills in the ground, which is always significant.
Yeah, so we do a lot of drilling every year. So obviously we're balancing multiple different platforms. We typically
Yeah.
do up to in between 40 and 50,000 meters of drilling a year. So we're very, very busy with drill rigs. The smaller program recently was it was something that sort of it's an active curiosity. So we've got our sort of what we call our stage one platform, leveraging our existing central Gawler mill. We've got our stage two development platform, which is our large scale Tunkillia project. That's the one that will produce 120,000 ounces per annum and take us up to around 150,000 as a target. And in between these two projects, there's an historical gold field, which is called the Tarcoola Gold Field. And in 130 years of high grade historical gold production, never will you find the word silver. Well, we went and drilled a structural target there and made a blindingly high grade silver discovery. So the discovery hole on that was 17,600 grams silver, less than 50 meters from surface. So we've been kind of following this up with a series of small programs because it's so surprising, it's so unusual that we're trying to sort of pick out and work out what's going on. And the program we just recently started, or we're currently doing right now, is probably the smallest drill program we've done in a long time. It's about a 550 meter diamond drilling program to try to get structural information to zero in on what's going on here. Because if we can find the source of that mineralization, we may be onto something that's very impressive. There's also high grade gold with that too. So you have 13-gram gold is sort of like the little brother to 5,000 grams silver, which is a really weird way to think about that. But it's very
Yeah.
exciting, and we're basically just trying to unpick it.
So how do you sort of plan your years around that when it sounds like there's a lot of work that you want to get done in certain areas? Do you go
Yeah.
by stuff that's sort of catching your eye that you might need to follow up on right away, or how do you sort of balance it all?
So we do we use a very careful planning approach. So we're sort of systematic in everything we do. What we focused on doing was building up our gold platforms. So
Mhm.
these are the sort of the core of our activities. But those have now both moved into sort of commercialization pathways. We've done all of the drilling that we need to essentially establish the resources around our existing mill and to establish a 1.6 million ounce resource around the second future mill. So now our exploration programs are essentially, our drilling programs, I should say, are shifting to commercialization drilling. So upgrading these known bodies of mineralization to measured and indicated, proven and probable. So that obviously takes a lot of thinking, but it requires a lot less blue sky thinking. But what that does is it opens up those members of our team that are sort of pure exploration to take their mind back over to these really interesting things and start unpicking the geological four-dimensional mystery of so many of these really interesting historical areas that have been known to host high-grade gold, but have been, vastly under-drilled and underinvested over time.
Okay. And lastly, I wanted to ask you about, you mentioned obviously your mill and the importance of that and that you own it. And that's obviously significant for a company like yours. You're working on the second one as well. Where does that put you as far as other companies are concerned? Not only having a mill that's up and running right now that you own, but also the potential for the second one as well.
Yeah, so our current mill is on care and maintenance right now, and but we're basically looking at reanimating those site operations by the end of 2026. So we did put it on care and maintenance while building up this much larger platform. Right? Like we didn't want to start operations and be producing 35,000 ounces. We wanted
Sure.
to start a 35,000 ounce operation knowing that it was a stepping stone to 150, right? So we're targeting a destination of scale, and we've now preset and it's sort of pre-baked that cake, if you will. And now it's about delivery and execution. The advantage of the mill is that it is fully permitted. It is existing. If we were going to, from a standing start today, say, hey, we want to build a mill and we need to do the evaluations and permit and finance and build that, you're looking at 2 to 3 years and $200 to $300 million. So that's a huge head start for us. It means the drawbridge we have to cross is really short. And we've estimated that we can fully reinstate that mill for 26 million Australian dollars, which is basically as close to zero as you're going to get for being able to turn on a mill and start producing 30,000 ounces per annum. The significance of that is it's a very cheap step into operations with very low dilution. But moreover, because we've created this end destination or this next step of 150,000 ounces, that mill starts generating cash flow to allow us to fund that internally. So we are not taking, as a junior explorer or developer, some big almighty jump trying to spend $400 million to get from a $50 million valuation into production. We're going to basically make a low cost, low risk transition into operations, re-rate our equity, re-rate our credit, generate cash flow, and then self fund. So that's where we're targeting, a $2 billion valuation instead of a $500 million valuation.
Yeah, makes a lot of sense. Lastly, just what's ahead? What should people be looking out for as far as the company is concerned over the next, 3 to 6 months? Some of the catalysts that you might be really looking towards or working towards.
Yeah, so a couple of key things. One, we have diamond drilling underway currently on that Tolmer high-grade gold and silver project. So we're looking for structural data that gives us the ability to then go back and try to zero in on where we think this source mineralization is. We are getting ready to launch feasibility studies on basically starting our stage one operation. So we're going direct to feasibility on that. We are moving our second stage project through the environmental permitting processes and taking that towards a mining lease application by the end of 2026. So we're also accelerating that. With that, we are going to have about 20,000 meters of drilling actually starting quite soon. And this is going to be drilling the central most high grade zone. So that's going to be very, very interesting. And then also this recent acquisition, the Woodland project. We are now going around, having acquired that and doing a review of historical metallurgical data. There's some really, really interesting opportunities for us to actually blend that material into a concentrate and then tip it into either one of our mills and bring forward more production. So we have an incredible amount of news flow going on. We've got a team of 15 people working full time. So we're very much more of an advanced asset manager and developer than we are an explorer. And that's kind of the news flow that people see coming out of us.
Absolutely. It's an interesting time for the company for sure, and an exciting one as well. Alexander, thanks so much. Look forward to following your story, and thanks very much for your time. Really appreciate it.
Likewise, thank you.
All right, there's Alexander Scanlan. He is the managing director for Barton Gold.